Welcome to the Deep Dive, where we cut through the noise to bring you the essential insights from your sources. Today, we're taking a deep analytical look at a company that's truly reshaping the future of advertising. The Trade Desk, ticker TTD on NASDAQ. Our mission for this deep dive is pretty clear. We want to equip you, our listener, with a professional analyst-level understanding of TTD as an investment opportunity. Think of it as your shortcut to truly grasp its business, financials, market position, and what the future holds. We're going beyond the headlines to give you the strategic insights you need.
Exactly. We'll dissect their core business model, dig into their financial health and recent performance, and crucially, put their key investment metrics under the microscope.
Yeah.
What's really critical here is understanding not just what they do, but why it matters for anyone looking at the dynamic digital advertising landscape today.
Okay, let's unpack this then. For our American investors tuning in, what exactly is the Trade Desk's primary business model? How do they actually make money?
Well, at its heart, TTD operates a leading technology platform. It's known as a demand-side platform, or DSP. Imagine a sophisticated control panel just for advertisers. Their core business is providing this self-service, cloud-based platform. It really empowers advertisers to manage and optimize data-driven digital ad campaigns. This all happens through programmatic advertising, which allows for real-time bidding, RTB, on ad inventory across almost every digital channel you can think of: display, mobile, video, audio, native, and critically, the rapidly expanding connected TV or CTV segment. They mostly generate revenue by taking a cut of the ad spend that flows through their platform.
So it's fundamentally about helping advertisers buy smarter, but there are a lot of players in this digital ad space. What makes the Trade Desk stand out? What are their real competitive advantages?
That's a great question, because their unique positioning is absolutely key. TTD has made a very deliberate choice to focus on what we call the open internet ecosystem. Think of it this way. Companies like Google or Meta, they operate these vast walled gardens. They control both the ad space and the user data within their own platforms. The Trade Desk, on the other hand, empowers advertisers to reach audiences across the vast majority of the internet outside those walled gardens.
Right, so more reach.
Exactly. And this independence provides advertisers with broader reach, unparalleled flexibility, and crucially, a high level of transparency regarding their ad spend and campaign performance. That transparency builds immense trust. On the tech front, their core platform leverages advanced AI and machine learning for data-driven optimization. It maximizes campaign efficiency by, predicting outcomes. Their independent stance also means they're not competing with publishers or media owners who supply the ad inventory.
Oh, interesting.
Yeah, so they can focus solely on optimizing for the ad buyer.
And building on that independence, how are they positioning themselves for future growth? It's such a competitive industry.
It is. Their growth strategy is multifaceted. They're heavily invested in strengthening their leadership in that CTV market, which is just seeing explosive growth right now. A major strategic pillar is accelerating the adoption of new identity solutions like Unified ID 2.0, UID2 we call it.
UID2, right, the cookie replacement.
Precisely. It aims to redefine how advertising works in a more privacy-centric world. Beyond that, it's about continuously enhancing their data and AI capabilities and expanding their global market presence to capture new opportunities worldwide.
Okay, this is where it gets really compelling for investors. Let's pivot to the financials. Let's see how these business strengths actually translate into their performance. How has the Trade Desk's revenue been structured, and what are its key financial health indicators? What should we be looking at?
Well, as a SaaS-based technology company, TTD benefits from inherently high gross profit margins. Currently, they boast an impressive 80.1% on a trailing 12 months or TTM basis.
80%? Wow.
It's high, yeah.
And nearly all of their revenue, we're talking $2.44 billion in 2023, comes from that self-service cloud-based platform we just discussed. While the U.S. is their largest market, it's important to note international segments are consistently showing robust growth.
Okay.
When we look at their cost structure, that low cost of goods sold is a major factor in that high gross margin. Their primary expenditures are strategically focused: R&D, sales and marketing, G&A. Essentially, they're reinvesting heavily in technology and market expansion.
Makes sense.
And this allows them to maintain very healthy operating margins at 17.63% TTM and net income margins of 16.04% TTM. And from a financial health perspective, it's excellent. Their debt-to-equity ratio is very low, 12.33%. That indicates a conservative financing strategy, funded mostly through equity, not debt.
Good sign.
Plus, their cash flow has been consistently positive, which is always a strong indicator.
That's a powerful financial picture, absolutely. Now, bringing it right into the present, what are the latest reported financial results? And what operational metrics should we, as investors, be really scrutinizing? Yeah, so the Trade Desk continues to demonstrate strong top-line growth alongside improving profitability. Their Q1 2025 results, announced back on May 8th, were particularly strong. Revenue hit $616.02 million. That's a substantial 25.4% year-over-year increase, and it significantly outpaced analyst consensus estimates.
Beat expectations then.
Clearly. Their earnings per share, EPS, came in at $0.33, also beating expectations. While Q4 2024 saw maybe a slight EPS miss, Q1 2025 showed a definite positive turnaround. The annual revenue growth rate on a TTM basis is sitting at 25.07%. And looking ahead, the expected EPS growth for 2025 is projected at a robust 35.85%.
35 growth guy.
Yeah, projecting an increase from $1.06 to $1.44 per share. The company has also guided for a Q2 2025 revenue of at least $682 million. That would represent about 17% growth year over year. That's when TTD is scheduled to announce its Q2 2025 results.
Got it. So given those strong results, let's talk valuation. What are the key valuation and performance metrics that a professional analyst would really drill down on for TTD right now?
Right. For high-growth tech stock like the Trade Desk, valuation metrics reflecting future growth potential are absolutely key. As of July 2025, their market cap is approximately $39.34 billion. Now, their PE ratio on a TTM basis, it's significant. It's 97.75.
97. That's up there.
It is high, no doubt. And it reflects really strong market expectations for continued leadership and growth. However, their forward PE, which accounts for anticipated earnings growth, is a more moderate 44.27.
Okay, still high, but more moderate.
Exactly. Similarly, their price to sales on a TTM basis is 15.34. Again, high compared to broader industry averages, but this is pretty common for high-growth SaaS companies with strong margins like TTD. The insight here, I think, for investors is that the market is betting on a fundamental, maybe irreversible shift in ad spend, away from traditional channels and those walled gardens.
Towards the open internet.
Precisely. Towards the open internet, a shift TTD is just uniquely positioned to lead. So this high premium reflects its critical infrastructure role, not just the simple growth story. The analyst consensus reflects this too. It's predominantly buy, with a very high proportion of buy or strong buy ratings from about 40 analysts. The average price target is around $87.72.
And for those investors maybe focused more on income, what's their dividend situation?
The Trade Desk currently does not pay dividends.
Okay, typical for growth tech.
Very typical for growth stage technology companies, yes. They tend to reinvest their earnings directly back into the business funding R&D, expanding into new markets, attracting top talent. It's all aimed at driving long-term shareholder value creation rather than distributing immediate profits. It's a strategic choice, really, to fuel that future growth.
It's fascinating how these external factors truly shape TTD's story. Let's delve into the major catalysts influencing the stock right now. What's moving the needle?
Yeah, TTD's stock price is definitely sensitive to several factors. The most recent and arguably most significant news is their impending inclusion in the S&P 500 index.
Ah, the S&P 500 inclusion. Right, that was recent.
Very recent. Effective July 18th, 2025. It was announced just on July 14th, and it led to a sharp 9 to 11.5% surge in TTD stock price pretty much immediately. This inclusion is expected to generate significant short-term buying pressure from passive funds and ETFs that track the S&P 500.
Index funds have to buy it.
Exactly. And long-term, it enhances the company's recognition and liquidity within the broader market. It's a big deal. Another critical catalyst is their AI-based next-generation ad tech platform, Kokai. It launched back in June 2023. Client migration to this platform is expected to complete by mid-2025, and it's really designed to significantly bolster their AI capabilities and improve ad efficiency.
Kokai, so that's their big tech push right now.
It's a huge part of their tech evolution, yes. And of course, investors should diligently follow their SEC filings, the 10Ks, 10Qs, 8Ks for important updates. Their Q1 25 filings were on May 8th, the 2024 10K back in February.
Okay. Beyond company-specific news, how does the broader digital advertising industry trends act as, key tailwinds for the Trade Desk?
Well, the dynamics of the digital advertising industry are a massive driver for TTD. Programmatic advertising itself is forecast for continued significant growth in 2025. A recent survey indicated something like 72% of marketers plan to increase their investment in programmatic. And TTD is, well, a clear leader in this automation and data-driven targeting space.
Right.
Then there's connected TV, CTV. It's another explosive growth segment. eMarketer projects U.S. CTV ad spending to reach nearly $33 billion in 2025.
$33 billion just in the U.S.
Just in the U.S., nearly doubling 2021 levels. Global CTV ad spend is projected to hit $48 billion. This is a core opportunity for TTD, especially since about 70% of CTV ad transactions are expected to be programmatic by 2025.
70% programmatic. Wow.
Yeah. Also, the impending phase-out of third-party cookies by Google Chrome from 2025, that presents a huge challenge for the entire advertising industry. The Trade Desk's Unified ID 2.0, UID2, is emerging as a really critical alternative here.
The solution they're championing.
Exactly. It's open source, encrypted, email-based, designed to enhance user privacy while still enabling targeting and measurement. It's a key factor for TTD's future competitiveness, potentially a game changer for the open internet. And finally, AI. Its role is just increasingly vital across the ad industry, market research, asset creation, campaign optimization. TTD's Kokai platform directly addresses this trend, putting them at the forefront.
And what about the wider media and technology industries? What trends there either support or maybe challenge TTD's trajectory?
The broader media and tech landscape definitely influences TTD. For instance, look at the intense competition among streaming services, Netflix, Disney+, Amazon Prime Video. It's leading to more ad-supported tiers, right?
More ads on streaming.
Which directly increases available ad inventory. That creates more opportunities for the Trade Desk, especially as surveys show what 64% of U.S. CTV users actually preferred ad-supported content in 2025. Mobile advertising also continues its dominance, expected to account for about 58% of digital ad spending in 2025. And then there's the rise of retail media. Major retailers like Walmart or Target expanding their advertising businesses. That's projected to reach almost $170 billion globally in 2025.
Another huge market.
Another huge market, offering another potential avenue for TTD's technology.
Finally, let's zoom out completely to the macroeconomic flows. How do things like global economic indicators affect a company like the Trade Desk?
Well, the macro environment impacts all companies, and TTD is no exception, though often indirectly. The IMF forecasts global growth around 3.3% for 2025, a bit lower than pre-pandemic averages. WPP Media predicts about 6% growth in global ad revenue for 2025. Generally, overall economic health correlates pretty strongly with corporate ad spending.
Less growth, maybe less ad spend.
Potentially. Inflation can increase operational costs and reduce consumer purchasing power, indirectly impacting ad spend. High interest rates. Well, they can increase financing costs and dampen investment sentiment, particularly for growth stocks like TTD, whose future cash flows get discounted more heavily.
Yeah, a discount rate effect.
Exactly. Conversely, expectations of interest rate cuts can actually improve sentiment for these types of stocks. Strong consumer confidence and purchasing power are crucial. They directly influence advertisers' budgets. PwC projects the entertainment and media industry to reach $3.5 trillion by 2029, partly driven by increased ad spending. Things like global trade disputes, regional conflicts, they increase uncertainty, can cause companies to pull back on ad spend. A stable employment market, on the other hand, supports consumer purchasing power, which benefits advertising. But despite these macro uncertainties, the Trade Desk is generally expected to continue relatively strong growth. It's propelled by the structural growth of the digital ad market itself and those core trends we discussed, like CTV and programmatic.
So the underlying trends are strong enough to offset some macro headwinds.
That's the expectation. And the eventual end of the interest rate hike cycle and economic recovery could also positively impact its valuation down the line. What's also worth noting here is TTD's high institutional ownership. It's around 72%, held by major firms like Vanguard and BlackRock.
Shows confidence.
It signals strong confidence, yes, and their buying or selling trends significantly impact the stock. For instance, Nikko Asset Management America has actually increased its TTD holdings in Q1. And you also watch insider trading activity from CEO Jeff Green, who's the second largest shareholder. That can offer clues about internal sentiment. You monitor that via SEC Form 4 filings.
Okay, so that leads to the flip side. This raises an important question. What are the potential pitfalls here? And how does PTD protect itself? Let's start with the potential risks for investors.
Right, every investment carries risks. For TTD, that high valuation, we talked about the PE around 97 times TTM, PS around 15 times TTM. That means significant future growth is already priced into the stock. So if growth slows more than expected, say from that 25% in Q1 or the 17% guided for Q2, it could lead to a significant valuation adjustment, a correction.
The growth expectations are very high.
Extremely high. Also, advertising budgets are often discretionary. They're vulnerable to cuts during economic uncertainty or recession, which would directly impact TTD's revenue. The uncertainty around the phase-out of third-party cookies by Google Chrome from 2025, and the speed of UID2 adoption, that could negatively affect their business model if UID2 doesn't meet expectations or adoption is slower than hoped.
It's a transition risk.
Exactly. Plus, increasing global data privacy regulations, think GDPR, CCPA, and maybe emerging AI regulations, could impose restrictions or increase compliance costs. Then there's the competition. Those large closed platforms, Google, Meta, Amazon, with their vast data and inventory, they pose a constant competitive threat, and their policy changes can significantly impact TTD.
The walled gardens aren't going away.
Not at all. And if major media companies strengthen their own ad tech or sales capabilities, it could reduce the inventory available through TTD or put pressure on its fee structure. And finally, talent. The fierce competition for top AI and data science talent is a continuous challenge. It could affect their innovation speed if they can't attract and retain the best people.
So given those risks, how does TTD really measure up against its rivals? Who are their main competitors, and what are The Trade Desk's specific competitive advantages in this field? How strong is their moat?
Well, while TTD is a clear leader in programmatic advertising, it faces diverse competitors. Other independent DSPs? Well, MediaMath face significant challenges. Xandr is now part of Microsoft. These shifts actually highlight TTD's resilience and strong execution, I think. The larger players, Google, Meta, Amazon, with their walled garden ecosystems, they certainly offer powerful ad solutions based on their own proprietary data. That's undeniable. However, The Trade Desk maintains very strong competitive advantages. First, that core independence for media owners. It offers advertisers optimal inventory choices and high transparency.
Independence and transparency again.
Key themes. They've also secured a leading position in the rapidly growing CTV ad market, which is absolutely crucial right now. Their advanced AI, embodied in that Kokai platform, drives powerful campaign prediction and optimization. Their proactive, open-source role in promoting UID2 positions them as a key player, shaping the future of open internet advertising. It really strengthens their ecosystem influence, and they have a broad network of strategic partnerships with media companies, data providers. Look at their advertising expansion deal with Disney, for example.
Right, that Disney deal was significant. It seems their core technology is a really significant differentiator then. How does The Trade Desk's proprietary DSP tech stack give it such a significant edge? Can we get into that a bit more?
Absolutely. TTD's technological prowess is foundational to its competitive strength. Take Kokai, their AI-based DSP launched in June 23. This is their next-gen platform, integrating all their advanced AI and machine learning. Its Koa AI engine isn't just about efficiency. It analyzes vast data points in real time to actually predict campaign performance and optimize bidding strategies dynamically. That drives superior efficiency and ROI for advertisers.
So it's predictive, not just reactive.
Exactly. And it's built on a cloud-native architecture, so it's high performance, highly scalable. Then there's Unified ID 2.0, UID2. This open-source identity solution, led by TTD, is their main answer to the cookie phase-out. It uses encrypted email addresses as IDs, significantly enhancing user privacy while still enabling precise targeting and measurement. Its decentralized and open nature aims to establish it as a new industry standard for the open internet.
Setting the standard.
That's the goal. Beyond these big pieces, their platform includes sophisticated tools for accurate measurement and attribution, seamless integration with data management platforms for using first-party data, cross-device targeting, robust ad fraud prevention. It's really a comprehensive suite for advertisers.
Okay, so the tech is strong. Beyond the tech, what about their internal capabilities? What drives The Trade Desk's sustained growth and leadership from within the company itself?
Yeah, their internal strengths are absolutely foundational. CEO Jeff Green. He's widely seen as a visionary, a strong advocate for programmatic and UID2. His deep industry understanding and long-term vision are critical to their strategy and execution. The company maintains a high R&D investment ratio relative to revenue. That attracts top talent in AI, machine learning, data science, the people needed to fuel platforms like Kokai and initiatives like UID2.
Investing in innovation.
Consistently. They also have strong global sales and marketing networks and a deeply customer-centric approach. They prioritize advertiser ROI and transparency, which leads to remarkably high client retention rates. Their robust financials, low debt, high gross margins, positive cash flow that provides the internal resources needed for continuous investment. They also excel at managing complex ecosystem relationships, data providers, publishers, agencies. That Disney deal is a prime example of managing those partnerships effectively. And finally, culture. An emphasis on innovation, collaboration, transparency that supports talent retention and helps them adapt in this incredibly fast-changing industry. So, to summarize our deep dive for you, The Trade Desk is a powerful technology company. It's driving a structural growth of the open internet advertising market, particularly within that critical CTV sector. Its unique DSP platform, that unwavering commitment to transparency and advanced data-driven optimization capabilities, those form its core competitive strengths. And the recent S&P 500 index inclusion just adds to its positive momentum. Key opportunity factors for investors. The explosive growth of CTV advertising, the increasing importance of UID2 in a cookieless world, continuous efficiency gains through AI, and that expected institutional buying from the S&P 500 inclusion. Key risk factors. Its currently high valuation is definitely one. Potential for reduced ad budgets due to macro volatility. Evolving data privacy regulations. Ongoing competition from walled gardens. And just broader technological shift. Bottom line. The Trade Desk is a compelling prospect for growth investors who believe in the structural expansion of digital advertising and the company's tech leadership. But before making any investment decisions, it is absolutely crucial to carefully review the upcoming Q2 2025 earnings and guidance again. That's August 7th. Consult analyst reports, examine the SEC filings, and most importantly, consider your own personal investment objectives and risk tolerance.
Okay, that was a truly comprehensive deep dive into the Trade Desk. I definitely feel far better equipped to understand this complex and frankly exciting space. It's clear they're not just riding trends, they seem to be actively shaping them, and that independent position in the market is really quite unique.
Indeed. The ongoing transition of traditional TV ad budgets to programmatic CTV, coupled with the industry's critical need for privacy-preserving identity solutions like UID2, it highlights a profound and, I think, irreversible shift. The big question for investors is, how quickly and effectively can the Trade Desk continue to capture and define this future, really solidifying its role as the backbone of the open internet's advertising ecosystem?
A perfect thought to leave you with. If you found this deep dive into the Trade Desk insightful and helped you think like a professional analyst, please consider subscribing to the deep dive wherever you get your podcasts. It truly helps us continue bringing you these in-depth analyses.